Well, we are certainly watching the recent move in the Canadian dollar. Had some nice momentum heading into the end of the year against the U.S. currency. We want to talk a little bit more about the outlook for the loonie and the currency market in general now with Adam Button. He is Chief Currency Analyst at Forexlive. Adam, Happy New Year. Nice to see you.
Great to be in the office.
So I guess the big story in the stock market coming into this year was this belief that central banks were ready to pivot on rates. And obviously there had been, during the rate hike cycle, a lot of investors leaning into the U.S. dollar. Yeah. So let's start there. What's the general tone around the U.S. currency heading into 2024?
Right. I mean, there was so much piling into the dollar last year. Number one, the U.S. did really well. You know, the American economy was the strongest economy in the G7. You know, there was the opportunity to get 5% in T-bills. There still is. Cash, there was a ton of uncertainty coming into the year last year. Now, heading into this year, people are much more optimistic. They're looking to get out of those safe assets and into assets around the world. And if you look at the U.S. market, say, compared to the rest of the world, it's far more expensive. So there is an opportunity for that money to spread out. And we saw that really in the last 8 weeks of 2023. And I think that trend will continue early into the year as central banks start to deliver. But there will be some big divergences.
Okay, so the U.S. dollar, it kind of benefits when people are looking for a little bit of safety. Now people are a little bit more risk on, and that maybe works against the U.S. dollar. Now, in this country, we've been talking about the likelihood of rate cuts as well. But the interesting dynamic that we showed was the loonie strengthening in the last few weeks against the greenback. What was happening there?
Yeah, I think that, like I said, there is just that optimism on global growth, and Canada is always going to be that risk-positive, asset benefiting currency. And we're seeing that, and we should continue to see that in the next couple months. But from there, we look to Canadian housing, we look to the Canadian consumer, which is weakened off, and there are some real risks this year on the downside. Maybe to the upside, you have China could reaccelerate, goosing the commodity market in Canada. And we could see consumers do a little bit better if housing starts to stabilize and that money starts to flood back into that market. So a lot of that hinges around springtime, which is around when the Bank of Canada should start to cut. If they are to deliver that, I think we will see, those risks come out of Canada, right? If you look at bank stocks this year, REITs, or at the end of last year, they've taken out a lot of that risk around housing. And I think that's a lot of what's driven the Canadian dollar to this point, but we're going to have to wait and see because the housing market doesn't really start for a couple months.
I mean, it's been a couple of years since we've had a conversation around a loonie that was notably above 80 cents. Here we are around 75. Where do you think it tends to trade over the course of the year?
Yeah, and I think if you look at the big picture, Canada has had these growth drivers for resource extraction and manufacturing selling into the U.S. for really most of Canada's history. And then we've kind of pivoted to population growth, to housing as drivers. If we look ahead, Canada doesn't really have something that it's selling the world. Canada's not a great place to do business right now, but there is an opportunity going ahead. And I think if we look at Canada, if we can dodge some of the bullets around housing right now, there is a lot of apprehension about immigration around the world and in Canada. So I don't know if that growth driver is going to remain for the loonie. So looking at this year, it's kind of a transitionary year towards, okay, will we build things in Canada again? America's having a lot of success right now in manufacturing. Some of the stimulus programs they had, they're building a lot of factories in the U.S. Canada, that's not quite the case, but it's an opportunity.
Interesting to hear you talk about immigration, which is a policy conversation, an economic conversation, but now a conversation in the currency market as well. Now, you did talk about oil. Historically, we always thought about oil and the loonie having that pretty parallel relationship. That seems, I don't want to say broken, but it seems a bit more mixed in recent years. How would you characterize it? If oil is going to find some buying interest this year, does that benefit the loonie?
Yeah, well, the two times we saw parity really in the last 25 years in Canada were oil booms, right?
Okay.
And Canada was a place where you could invest and grow production. In the last cycle, we didn't get that upside in the loonie because, money can't really get oil out of Canada. You can invest in, but you have a hard time getting the oil out. Now we have TMX opening this year, LNG Canada, Coastal GasLink. That's good news for Canada, right? Those are three things that will move the needle. But on the other hand, you have OPEC, which is really the elephant in the room for Canada. You have real phrase starting to emerge from OPEC, and the chance that it all breaks down for OPEC and takes oil down with it and the Canadian dollar. So that's a massive risk for Canada, really, in the second half of the year.
Well, it's been so interesting because all these Red Sea tensions are getting the attention of the oil market, but all the commentary coming out of OPEC Plus nations, it was getting a pretty muted response in the tail end of 2023. So that's going to be something to watch. And then broader currency stories that you're watching beyond the greenback, beyond the loonie, you're going to be keeping an eye on the yen this year. What's going on there?
Yeah, it's been the weakest performing major currency now for 3 years running. That's never happened in the modern history of the currency market. It's been absolutely beaten up. Everything about the latest part of this cycle has been negative for the yen as they kept rates super low. But the cycle's turning, right? The rest of the world is cutting rates now. The yen made a bit of a double top there at 150 against the US dollar, and it's now strengthening again. And so there's, it's extremely cheap. Equity markets there are cheap. Like I said, people are looking for new markets to invest in. Stable country, and I think there's a lot to like just on a bit of a mean reversion in Japan for this year.
We saw